Kia ora, everyone. Thank you and welcome to another Good to Know webinar from Healthcare Plus. And I'm Alan Sharp. I'll be your host for tonight. I'm delighted to welcome Jonathan Beale from Tower, who are our newest member benefit partner to tonight's webinar, to answer your questions and hopefully provide some helpful insights on how to ensure that you're not overinsured, you can afford your insurance, and that ultimately you have the right cover in place that you need. As always, we asked for your questions up front, and you didn't disappoint. So we've had another huge response, so thank you very much. Because of that, I've distilled them down to a few general questions that hopefully represent most of the key themes that you wanted to hear about. Obviously, there were some specific questions in there that are not appropriate to discuss, I guess, in tonight's forum, but we will follow up directly with each of the members in the next couple of days. So format for tonight will be a mix of presentation and Q&As, and I'm hoping we can get a good conversation going and that we will glean some useful information from tonight. However, if you think of something during the session and you want to ask or comment, then please do by using the chat function. Just click the icon at the top of the screen and it will open up on your right and you can ask away or comment away. I'll monitor the chat window as we go through the event, and hopefully at the end of the session we'll have some time to maybe go through some of them, answer some of those questions. But if we don't worry, we'll collate them and we'll email them out to everyone after the webinar. So look out for that too. We're also recording the event, so you'll get a copy of the presentation from us to watch again and to pass on to your friends and family if you feel so inclined. Last thing from me, before we hand over to JB, I'd like to do a quick poll question up front. For some of you, it may pop up on your screen, but for others, you'll need to answer it from the chat. So the poll question I have for tonight is, did you know you can switch your house insurance in New Zealand at any time? Please answer yes or no. Ah, good response. So clearly we're dealing with people who know that question. So hopefully we'll have other information that you can hopefully pick up on as the session goes on. So anyway, that's enough from me. And so I'd just like to welcome JB. Welcome to this evening. And maybe we'll start with a little bit of who Tower is for our viewers.
Cool. Thank you, Alan, and lovely to be here on a Wednesday early evening, I would call it, rather than afternoon, early evening. My name's Jonathan Beale. I have been at Tower now 4 years. I'm responsible for running the partnership business here at Tower, so it was lovely to partner with Healthcare Plus late last year. So we're looking forward to how we can support you with your insurance needs. I previously to Tower, I was with ASB for about 15 years. I ran their wealth insurance business, so I kind of know a lot about KiwiSaver and wealth as well. Spent a bit of time at Westpac, and previous to that, I was in the UK doing stuff that you don't need to know about. So what I'm going to start by talking a little bit about Tower. Then I might sort of jump into sort of sum assured and talk a little bit about that, because that was one of the themes of the questions. Excesses, what's that all about? Have a look at why premiums are going up or have been going up, and give you some insight on what's going on in the market at the moment, and then kind of finish with sort of ways to save and what we're going to do. But I will kind of just share my screen now, if that's all right. So give us like 1 second. Just where the technology obviously will work. Share. Oh, if Alan could tell me when you can see it, that would be awesome.
It's doing its thing.
Doing its thing. That's always good.
Right, got it.
You got it?
I have anyway.
Awesome. I haven't. Okay, let's start with a little bit about Tower. But before I kind of, there you go. I'm really keen on making sure that I don't know if you do this if you're a teacher and if you do this in the classroom, but just to make sure like people are listening and paying attention and not on their phones and that type of stuff. I will be giving away a cash prize. And the cash prize will be at the end, and there'll be one question that you can all jump into the chat and answer. I will give you the answer through the presentation, so it's not the most difficult question, but I will be giving you the answer. I won't tell you when I've said it, but if you listen, and then at the end we'll have a bit of fun, ask the question, and see if someone can win a cash prize. But so let me tell you about Tower. So Tower. We are the only New Zealand listed insurance company in New Zealand. We've been on the NZX, the stock exchange here in New Zealand, for 25 years. And actually this year clicked on into the top 50 companies in New Zealand, which was a big milestone for us. So if you are in KiwiSaver, you got some New Zealand equity exposure, you'll have some money invested in Tower now because you're tracking the New Zealand index. So thanks for your support of our company. We are Kiwi owned, and we say that very proudly. There's two very large insurance companies in New Zealand called IAG and Suncorp, both Australian owned, and then they have all these different brands underneath. So like your AMI, your AA, State, NZI. So they're all actually Australian owned, not Kiwi brands. So we're a Kiwi brand. We are 155 years young. We've been around a long time. We were formed in Dunedin in the South Island, and we represent all of New Zealand. We've also got quite a big presence in the Pacific, particularly in Fiji, and we've got about quite a big setup in Suva with about 350 people from Fiji working for Tower over there, which is great. We are focused on personal lines insurance. What do I mean by that? I mean that we want to insure your house, we want to insure your contents, we want to insure your car parked in your driveway. If you're lucky enough to have a boat, then we'll insure your boat. If you've got a dog or a cat, we can insure those. And if you're lucky enough to go traveling, we can give you some travel insurance as well. And that's kind of our remit. That's where we play. You won't see us trying to insure big tall buildings in Auckland or in Wellington. We leave that to people who that's their specialty. Our specialty is personal lines, and we're very good at it. We've been on a bit of a journey over the last 5 years around digital capability. So moving to one simple platform. That enables us to be very nimble and active and really focus on digital capability. So we don't believe insurance is a grudge buy. We believe it should be it's an important product to have, but it should be a seamless, easy product to buy. It should be an easy product to understand, and you should be able to do what you want without having to call up a contact center or send an email. So we spend a lot of time and effort making the buying journey really easy, making the service journey really easily digitally, and also now making the claims process really easy, so you can actually lodge claims and go straight through without ever speaking to a human being. And we are ruthless in our focus on customers. So we spend a lot of time talking to customers, understanding what's working well, but also what are the pain points and how we do that. So we don't want to be a smaller version of Australian insurance company. We want to be Tower and do it the way Tower do it, and things are going really well at the moment. So hopefully that helps you understand a little bit more about Tower.
Cool. Thanks, JB, for that. So why don't I just kick into some of the questions? Yeah. Clearly, as part of our communication out about this webinar this evening, we did focus quite a lot on sum insured. and what that actually means. And we got a lot of questions, obviously, back from everybody too, around some insured. So, can you just maybe take us through how we go about calculating the right amount for how much our house needs to be, our house insurance needs to cover, and how we do it? Because I know at Tower you have a very very cool way of doing it.
Cool. Thank you, Alan. Yeah, well, I'll demo something in a second, but I'll just make a couple of points before I do that. So I'll explain what sum insured isn't first. Yeah. So
good idea.
I say that because I hear this a lot when I speak to customers, and we've partnered with Kiwi Bank, and I was talking to about 400 Kiwi Bank staff last week, and you'll be surprised what people say. So they think that the sum assured is the price they paid for their property. Yeah. And that's not, because obviously when you've bought a property, there's the price of the actual property, and then there's the land value as well. Yeah. So it's not what you've paid for it. It's not the market value of your house, and it's not just what the land is worth. Yeah. It's actually the total amount it would cost to rebuild your house, plus including demolition costs, removing any debris, professional fees, and council fees. Yeah. So when you're trying to work out how much it's going to cost to rebuild, that's quite a difficult thing to do. But it's important that you get it right. Yeah. Because if the worst does happen, and we don't have to go back too far to see Cyclone Gabriel, Auckland floods, that things do happen, and the climate is changing quite rapidly, and that's having an impact on the storms and the effect it has on properties. Plus, technology and the things we do and the way we build houses, we see a lot of house fires across New Zealand, and these, what are they called? Those multi-plugs. They're like multi-plugs. They cause a lot of fires in New Zealand, especially if you buy the cheap ones. If you vape and you use the cheap vaping chargers, those things start fires a lot. Yeah, and we see that a lot. But if your house burns down, you'll want to rebuild it. Yeah, so it's the rebuild cost, the council cost, and all that type of stuff. Yeah, so that's really difficult to work out. So we try and make it easy by using a thing called the Cordell calculator, and this tends to be used a lot in the industry. What we've tried to do is just make it easier for the customer to use. Yeah. So what I'm going to do is I'm going to jump into the calculator and just sort of demo and show you some of the key things that you need to maybe think about when you're doing it. Can you still see my screen? Is that working?
Hold on. I can still see the screen, but we haven't switched to the Cordell calculator yet. So you need to.
Oh, yeah, hang on. I need to share. Sorry, hang on one sec. Bear with me. Share. I'm going to swap my sharing.
Yeah. Thanks, Sonia.
Should be able to see that now. Can you see that?
It's coming up. Here we go.
Cool. Do you see it now? Yep.
Yes, absolutely.
Cool. Perfect. So all I've got on is into the Tower website, and it takes you to the house insurance. Calculate your sum assured. Yeah. So you just go into Tower, and all you do, simple click. It will take you into the Cordell calculator. Yeah. And so if I put in my home address, Glen Road. I'll agree to all their terms and conditions. It will show you it's all the information the council has got on my property. Yeah. And so it will say the type of property, when it was built, the slope, construction, quality, and a lot of this is standard. Yeah. So they only know what they know, and they can only feed it. Yeah. But you know your house better than the council do. Yeah. So if I just take what they're saying about the property, so it's on a gentle slope, it's got 1 story, it's a standard quality of construction. I know the floor area, they filled in the floor area. Do I have a garage? Blah, blah, blah. How many bedrooms? All that type of stuff. Any structures? Do I have a pool? Blah, blah, blah. Yeah. And it will say at the bottom, it's going to cost $1 million to rebuild. Yeah. So real build cost is 780, but all these other costs takes it up to $1 million. So if my house is needs to be rebuilt, that's the cost. But some of this information isn't quite right. Yeah. So let's just play around with it and see what difference it makes. It is on a gentle slope. Actually, my house is 2 stories because we went under. My wife would probably say the quality is better than standard, and we've got a nice granite kitchen and all those types of things. So let's add that in. We don't have a garage. We've actually put another bathroom in. We've got the decking. We've got all that. We've got a pool. We've got no tennis court. Everything else is right. Well, let's recalculate by changing the standard of the quality of the build and the bathroom. Yeah. And it's made a $500,000 difference. Yeah. So if I hadn't gone in and I'd kept it at, take what they know, I'm going to be $500,000 short if my house needs to be rebuilt. Yeah. And that's kind of what we mean about getting it right. Yeah. So the key things when you're looking at your sum assured is to make sure that the quality of the build that you want of your property is correct. You get the slope of the land, is that the right kind of slope, and how many bathrooms you got. They're the key ones that are driving any difference in your cost. Yeah. So hopefully that gives you a bit of a view on how it can change. That's quite a big swing from just doing 3 changes. But if you go onto Tower's website and you can put in your address, it will come up with the Cordell calculator. It will feed into the quote, and then you can change those things that you need to change. So change the quality, make sure the slope is right, and then bathrooms is the key thing. And anyone who's done a renovation will know that bathrooms and those kitchens are the things that cost the money. But that will help you get the right sum assured, which is vital, because if something does happen and your policy says it's going to pay out $1 million, we'll pay you $1 million. If you need 1.5, you'll be phoning the bank and say, can I borrow a bit more money? Yeah. So it's very important you get it right.
Yeah, I think that's quite an important point to make, that the rebuild costs can sometimes be more than the house is actually valued at as well, and the house and the land is worth. Because ultimately, if you're wanting to build to the same standard that your house is at, then you've got to look at the rebuild and the materials and all of that kind of stuff. One question, though, which came through from someone, was that they live in a heritage area. Does the Cordell calculator pick up things like that, or would that be something you'd probably have to come and speak to you directly about?
Yeah, I'm in a heritage area, and it picks up mine. So it should. If it doesn't, I would just ring through to the tower. We can help you out. The underwriting team have millions of different bits of data points coming in and access to all sorts of stuff. But it should be there. I'd just be conscious that if you've done any renovations or changed anything, it may not have been updated. So that's why it's worth going through and checking to make sure it's got the right information in it.
Cool. And in that sum assured calculator, it doesn't talk about like earthquakes and flood risks and stuff like that. That's something else that you'll cover off.
Yeah, I can talk. I can show you something just in the next couple of minutes, Alan. Yeah, it's just
Cool.
about all that's about is that it's not about risk. It's about the property and the quality of the
And the
build
materials to
and the
get it
materials.
back to what you want. Yeah, absolutely.
Yeah.
I just wanted to be clear on that. Good. Okay. Well, there was a lot of questions on sum assured. So hopefully, people, you can see that that calculator, that Cordell calculator, which I understand is used across the industry as the benchmark.
It is. It is, Alan. It's used by a lot of the larger insurance companies in New Zealand. I'd be wary of some other companies use their own calculator, and from my experience, there is a big difference, and it's always lower. Yeah. So if I did a one on my property, and it was about 300,000 lower. Yeah. And so you got to be careful, because obviously the sum assured is one of the things that's driving your premium. Yeah. So if your sum assured is lower, your premium will tend to be a bit lower. Yeah. So just be wary of that, because the important thing is you take out insurance for the moments that matter. When the rubber hits the road and you need to build your house, you want to know you got the right amount of money. But,
correct, because an insurance premium is there to cover to ensure that you've got the coverage that you need.
Exactly.
When rubber hits the road would not be what I would use, but there you go. All right, cool. Well, let's actually talk about the cost of premiums, because we've had a lot of feedback and questions around just the very fact that insurance seems to be very expensive. So what are the sort of tips and tricks that you can use to maybe reduce down your premium? So now you know what your house is worth. And I'll also add that Tower also has a contents calculator that works very similarly, where you can put in all the various things that you have, etc., and calculate what that worth is as well. So now you've worked out what your house is worth, or what your contents is worth, and what you need to cover it for. Then you've got the premium. So how do we look at maybe helping us reduce down the costs of insurance?
Yeah, well, there's probably I might start with excess. Yeah, so and I'm people and we listen to calls on the at the contact center here, and we ask customers, oh, what excess do you want? And a lot of people actually don't know what an excess is. Yeah, and so asking them which one they want is probably not the best question. Yeah, but just so everyone's on the same page, like the excess is the amount of money that you'll have to pay if there's a claim. Yeah, and so I'll use a very simple example of my daughter. My daughter's in Dunedin. I get a phone call on Sunday morning. The world's fallen apart. She's lost her phone. And then she found it later, but it'd been driven over and it was been smashed a bit. So now she's living in Dunedin. She's 19 years old and she hasn't got a phone. So she phones her father and goes, "Dad, what are you going to do?" And I go, "Well, I'll go and I'll put a claim in." And so we put the claim in. I did it all on my phone through my tower, and the excess in my policy was $500. Yeah, so the phone was about $1,000. So we had to transfer $500. She goes into Noel Leeming on the Tuesday morning and picks up a new phone. Yeah, so I paid $500 and the insurance tower picked up the rest. Yeah, if you think about that around a house, your $1 million to build house falls down or gets burnt down, the vast majority of what's going to be paid is by the insurance company rather than your excess. Yeah, and so your excess will drive your premium, and a lot of companies' excesses will range from about $400 to about $2,500. Now, if you think about it, the higher the excess, the lower your premium is going to be. Yeah, because you're actually going to be paying more in that claim. So if you think about my daughter, if my excess was $2,500 and the phone's worth $1,000, I probably wouldn't have put the claim in. Yeah, because I'm up for the cost. Yeah, so that's the key driver in how you can reduce premiums, is to go, what is my excess? Yeah. Now I would suggest that if you think about your property, you're going to probably, and our stats show, people claim less on their house policies than they do on their contents policies. They claim less on their house policies than they claim on their motor vehicle policy. Yeah. So if you think about that, if I'm less likely to claim on my house policy, maybe I should have my excess a bit higher. Yeah. So really, if your house burnt down and the chances of that are low, yeah, do I really just want an excess of 500? Why wouldn't I go to 2,500 to really bring the cost down of my premium? Where if my contents, I can see myself, I might lose my phone, I might lose my spectacles, I might get robbed. I'm more likely to want to actually claim, and so I don't want to pay out too much money. And the same with motor, you might want to bring it down a bit. But we can jump on, and I can show you actually, Alan, what it looks like, and what are the quantum, because I think that might bring it to life a little bit more. So just bear with me.
Yes, go ahead.
Just bear with me. Let me just, I'll do a contents quote just so you get it. Here we go. I'm going to do the whole sharing thing again. Okay, tell me when you can see it, Alan, and we'll jump in. Can you see it?
I can indeed. Thank you.
Cool. All right, we'll do a contents quote. So again, just on Tower's website. And I jump in and I click contents. There we go. So actually, let's not do contents. Let's do house. Yeah. So I'll go in, and this will help you understand sort of how interactive it is with Tower and easy. And you'll see when the Cordell calculator will pop in a sec. Okay, so all I have to do is type in my address. Quite a lot of Glen Roads, yeah. And then now our system is now talking to Cordell calculator. They just want to make sure I know what my house looks like. So it's freestanding. And then already it's pre-populated with the year, number of levels, same. So all that information you saw when I previously shared on the Cordell calculator is there. See, it's listed it as standard quality, but again, I could go in and change it. I can change the slope, all that type of stuff. Yeah, but let's just take it at standard at the moment. And it's telling me it's going to be 9. I'll confirm for that. Have been rewired. Yes. There's no hazards. So what this is showing me now is what are the risks associated with my property. So it's low for earthquake because I live in Auckland, and for flood it's very low because I live on a hill. Yeah. So if you're in an area that's very maybe high flood, this would say high. If you were potentially living in certain areas in Wellington, that would say high for earthquake. But that's just giving you a view of your risk, and we're building that out all the time. I've got no self-contained. I live there. I don't run a business. And then I'll tell the truth. I haven't had any claims. And then jump in it. So it's taken me like 20 seconds, yeah, to do. And they'll come up with a quote. Okay, so here's the quote. So what it's doing is it's showing you at Tower. One of the things that's very different about Tower is we have 3 levels of cover: standard, plus, and premium. So think of standard as bronze, silver, gold. And so one of the ways you could save is maybe you might be on a higher level with premium. You could move down to standard or plus to standard. Some of the benefits will reduce, but let's think about the excess. So you can see on the right hand side it's saying that my per month is $172 per month. Yeah. And my excess currently is set at $750. Yeah, which seems quite, sort of average. But let's say I want to, well, actually don't think anything's going to happen. I've got a bit of money in the bank, and if I did make a claim, I'm happy to pay 2,500. Yeah. And it's gone down to 145 a month from the 172. Yeah. So it saved you some money. Or you let's go to 1,000. Yeah. 165. Yeah. So you can see the difference in, so if personally, my excess I've got is $2,500. Yeah. I'm prepared if something happens that I'll fork out 2,500 because I believe my risks aren't that bad. But that's probably the best way of trying to work out how to reduce your premiums by changing the excess, because a lot of companies will just default you to 750, yeah, or they default you to 500. You go in there and play around with it and move it. The other thing you'll see about saving money, I talked about like maybe the types of cover you got, so you can have a look at what types of cover you got. You might want to move down to save that. If you pay on an annual basis, that will be a little bit cheaper as well. Most people give you an annual discount. And one of the things that Tower does now that's very different to other insurance companies, we still offer what we call our multi-policy discount. So if you buy more than one product, you'll get another discount. So you'll get, if you got one policy, no discounts. So if you just got your car with us, no discounts. If you add house, then you get 10% off. If you add contents, then you'll get 20% off. Yeah. And that's the Tower doing multi-policy discount to all Tower customers. Obviously, Alan will probably talk about it later. The HealthCarePlus discount would be in addition to that. Yeah. So it does start to make some quite significant savings for you. But I would really focus on the excess. I would focus on the premium period. If you can go to annual, then I'd recommend that. Look at the benefits that you're getting, and is there a chance to move it down? But that's kind of excess is the key one. That makes the real difference.
And I guess the other thing is not just to set and forget it. You should always be going in maybe on an annual basis. Well, you have to go in on an annual basis anyway, to just ensure that what it's covering is what you need it to cover. Yeah. And I think that sum insured is an important piece of the calculation. I also think if you can get away with increasing your excess, and of course you need to then, if you're going to increase your excess, then you need to also ensure that you have got the means and wherewithal to cover that excess as and when the claim arises. Or if the claim's below your excess, then you've got a decision to make not to make a claim, because having multiple claims or having claims on your insurance, I guess, will also have an impact on your future premiums too.
But do remember, like, insurance companies are here to pay claims. Yeah.
Yes.
So I'll always say we pay 100% of actual claims that people want to put in that are real claims. We pay 100% of them. Yeah. And we don't pay fraudulent claims. We don't pay claims that isn't a claim. Yeah. But we're there to pay the claims, and the whole industry is set up to pay those claims. But it's kind of, you've got to think about, I'm going to have to put my hand in the pocket to pay it. So you got to put that lens over it as well. But for your house, I'd certainly think about increasing the excess, because that's your biggest asset probably, and your insurance will kick in. It'll be quite a large amount, I think, we'll be paying out.
I mean, I guess one of the questions was around using an excess is, how do I calculate what the right excess should be? But I guess that comes, like I said, down to affordability and whether you've got the wherewithal to add that into and are prepared to do that as well.
Yeah, but it's also like, what do you think? What do you think your risks are? So do you walk around with a brand new iPhone and jewelry and all those types of things, or you've got a sort of a different time of life? It's kind of it's going to be individual for everyone. I just don't think picking the standard oh, let's go for 500 is the right approach. And it does make a big difference, you know. And thing about excesses, you can move it around. Like you're on a tower, you could change it. Like it's easy to do. I got my renewal last year and the premium had gone up, and I just played around with the excesses until I got the premium level down to what I was paying the previous year. Yeah. So and it kind of works. It kind of works. I don't yeah, it's a little known fact that you can change your excess and it does make a big difference.
So so that leads us quite nicely on to premiums then. And there was a number of questions around premiums too. And I guess the main thing is everyone was saying, why do premiums go up all the time?
Yeah. Well, they don't always go up, but I think in the last few years they've definitely gone up. And I'll hopefully maybe give you some good news as well. So if you think about the last 2 years, if you think about, well, let's start with insurance premiums. Yeah, insurance premiums are made up of lots of different factors about the risks associated with them, you know, claims frequency, yeah, how often a claim happens, claim severity, how big the number of, you know, the dollar value of claim. Yeah. So if you think about the last 2 years, there was or even the last 3 years, it was almost, and pardon the pun, like a perfect storm of things going on. Yeah. So you had inflation going on. So we all saw the cost of, you know, food and everything going up, but the cost of, you know, when fuel goes up, transport costs goes up. So moving materials and stuff around goes up. Yeah. So rebuilding houses, all the cost of that type of stuff, everything was going up. Wages were going up as well. So you start to see all these claims costs, the cost associated with paying a claim or rebuilding a house or fixing your car, all going up. You saw the fact that if you think about crime, there was, you know, maybe people were saying crime, oh, it hasn't changed. But if you ask all the insurance companies, you say cars are being stolen more often, people are breaking into cars more often. If you had a Toyota Aqua, it was the most stolen car in New Zealand. It was the Ram Raid car. It was, you know, you can break into an Aqua in less than 10 seconds. And it was being stolen and off you go. So you started to see a lot of crime, which again was pushing claims. So you did see premiums go up, and then we got hit by Auckland weather events, and you got hit by Cyclone Gabriel, which just made a massive difference to what was going on across New Zealand, and that cost New Zealand, you know, insurance companies and reinsurance billions and billions of dollars. Like we got more claims in 2 days than we'd had in the previous 5 years. Yeah, so that's kind of how big it was. Yeah, it was quite incredible, and that adds to supply chain issues, all those types of things, access to stuff that pushes the price up. Yeah, and so customers, and I'm sure you all felt it, you saw your premiums go up. Yeah. What actually is happening now is actually the environment is quite benign and quite different. Yeah, so we have seen crime rates come down. We're seeing less cars stolen. We're seeing less people on the road, so there's less accidents. Yeah, we're seeing the weather has been, touch wood, has been pretty good for us. Yeah, so we've not had any major events, and inflation has come down. So cost of materials and repairs, all that stuff, has come significantly down. So if you look at, say, your renewal price you're getting now and going forward, you should actually be seeing 0 price increases and potentially price decreases. Yeah. So I was in a meeting this morning where we're reducing sort of the top 50 cars that we like. We're reducing those premiums by sort of double-digit numbers. Yeah, because the world has changed quite significantly, because it has been a difficult 3 years. I think we're at the end of it, and we're starting to see it come off the other way. But yeah, the premiums have, you know, there's lots of influences that go into it, but hopefully we've seen the end of it, and we're certainly, from our side of it, we think we're at the end of it.
That's an interesting point you made there about types of cars and stuff like that, because we did have a question that came through, and of course we don't know the details, but
Yeah.
why do I pay a higher premium than my husband when mine has a lower market value. But you mentioned something there about cost of repairs and stuff like that. And so there always is this thing about European cars versus New Zealand cars versus Asian cars. And so I guess the type of car you choose may have an impact.
Like we love at Tower, we love RAV4s. Yeah, we love RAV4s. Yeah, they're well made, well maintained, and people drive them. They tend to be more of a family car. Yeah, so people are driving them better and smarter. Yeah, we love RAV4. So if you've got a RAV4, then come to us. But there are, if you think about the market value is the price that you're going to get for that car. Yeah, not the price to repair it. Yeah, and I'm sort of I remember cars when they had just bumpers, yeah, and it just was a metal bumper. I remember windscreens when they were just a windscreen, yeah. If you think about bumpers now, they have cameras, sensors, they have all sorts of windscreens that they have sensors for when it rains, yeah. So the cost of repair of some of these vehicles, and as more and more technology gets into them, the cost of repair is going up quite considerably, yeah. And so, you know, if you buy a Tesla and try and get a windscreen, like there was a period about a year ago where there were no windscreens in New Zealand to get. Yeah. So what happens? The price goes up and it takes longer to do it. Yeah. So the type of vehicle that you have will drive the premium for a lot. Yeah. The market value and the sum assured will have some bearing, but the type of vehicle is there. So you think about Aquas, people were buying Aquas 2 years ago, paying 15,000 for or $12,000 for an Aqua, and the insurance premium was about 5,000. Yeah. Now they're a nice, great car run around, but they were getting stolen lots. Yeah. If you think about sort of European cars like Peugeots and those types, lots of technology in them all over the place. The cost of repair is really high. I think I think a range. I don't know if I'm lucky. No, I haven't got a Range Rover. We'll never have one. But I think a windscreen on a Range Rover is about $35,000 for the windscreen. Yeah. So that things are moving fast. Yeah. But,
that's good to know, because my wife would love a Range Rover, and I would not countenance it at all.
I'm happy with my 10-year-old Highlander.
I'm very happy with my Mazda. Thank you very much too. Right? I had an Audi once before, and I totally understand where you're coming from around costs. Mazda, Japanese, that's where it's at. Okay, so I think we've pretty much come to the end of the generic sort of questions that came through from everybody. I'm having a wee look around on the chat, and have we got any questions that people maybe want to ask that we haven't covered, or any issues that we haven't covered? It is 4:45, so we are getting quite close towards the end of the presentation and the webinar. I'm just having a wee look. No, I think here they come. Hey, retaining walls, should these be insured individually?
Good question. No, if you go onto our quote to buy, it will ask you about retaining walls, and it's like we do a sort of a have you got a low number, median number, high number? But yeah, retaining walls is important, but you don't insure them individually. It'll be part of your total sum assured.
Does Tower publish their preferred vehicles to insure?
we should. We don't.
I think that might be. I would imagine the car industry would have something to say about that.
Yeah,
if the insurers decided to say these are the cars that we think New Zealanders should buy, it would be a nice thing to do. But I think there would be quite a furore around that. And the other question here is, and I think I know the answer, but I'll leave it to you, the expert. Why does it cost more to insure an electric vehicle?
Electric vehicles, yeah. There's a couple of things. There's a lot of technology in them, yeah, which means technology equals expensive to repair. There are examples and data points of electric cars catching fire, and the risk around that. Yeah, there's some we like more than others. Yeah, but yeah, it's a bit, hybrids are probably a better option for us than electric vehicles. But yeah, but it's the technology side. If you think about the floods in Auckland, we were towing cars to um, car parks or bits of land that we turned into car parks, and you could, as far as the eye could see, were cars just with stickers on going written off, written off, written off. Yeah, and some of them had only had about this much water in them, but the batteries in the bottom, the electrics are all there. It's just a write off. Yeah, so that will be why the premium's a bit high.
Yeah, no. Oh, Carlia's asking which are the better EVs. Again, same answer to before. I don't think the car industry would like us saying these kind of things. Okay, right. So I think I'm going to wrap up today's session. And so I'm going to thank you, Jonathan, for your presentation and your answers to our questions. And I think it's really insightful. And to be honest, until Tower came along, I must admit I was completely in the dark when it came to some things, particularly around some insured on my house insurance. And my house insurance is the largest insurance I've got. And again, I would recommend that our members go on and have a look at the Tower quotes, because one way that you can try and reduce down your premiums is to have a look around and get some quotes, check that you're covered correctly and all the things that we've talked about today. And Tower does an easy job of doing that. And then as Jonathan mentioned before, as a member of HealthCare Plus, you're getting a discount on your premiums for house and contents. And if you take out car, like I did as well, which there is no HealthCare Plus discount on. However, by adding it to the other two, I get a multi-policy discount. And I've saved personally $170 a month on my insurances, which I think is fabulous. And so I would recommend people to go to HealthCare Plus, click on the HealthCare Plus, get a quote link with Tower, and have a play around. And have a play around with the Cordell calculator, have a play around with the content calculator, because it's amazing how much information you can learn by just playing around with these calculators, and they don't take up much time to do that. So I would say that that's my takeout from the relationship we've had with Tower to date. And so I want to thank everybody for turning up tonight. Hopefully you learned something from it. And again, thank you, Jonathan, for coming along tonight. And we will send out more information. We'll answer your other questions, and we'll do a bunch of follow-up stuff post this webinar.
Thank you, John. I've just got my, I want to give away the $50 cash
incentive.
Yes,
the $50
prize. Don't want to forget that. Everyone's hanging in for the big cash prize. So
I wanted to take it.
Yeah, exactly. But thanks for everyone for listening and the opportunity. Yeah, we as Alan said, like there's 10% off house and contents insurance. We think we have a really good proposition. Plus, you'll get the multi-policy discount on top of that as well. So it does really start to make a big saving. If you play around with the excesses, then you can really reduce it. And for the 60% of people who said they know you can move house insurance, then give us a go. The 40% who said they didn't know you could move it, then now you know you can, so give it a go as well. And we'd love to look after you. But okay, let's give away. So what I'll do is I'll say the question. All you got to do is jump in the chat and put the answer in the chat. First person to put the answer in the chat wins the money, and we'll send you the cash prize. So the question is, how many years has Tower been on the New Zealand Stock Exchange?
Oof. What's the answer, JB?
Has someone jumped in?
Has the answer come up on the chat yet?
The first one was 20. The answer is 25 years at 451. Is that Irene?
Irene Laird.
Irene Laird. Fantastic.
Okay.
Well done, Irene. We will send you $50 Prezi card to spend wisely or not.
All right, well done, Irene, and commiserations, everybody else, and thank you very much for turning up and listening to us. And we hope to see you at the next Good to Know webinar. And again, thanks, Jonathan.
Pleasure.
So cheers, everyone.
Thanks, everyone.
Bye-bye.
See ya. Bye.